Every single day, trillions of dollars change hands in a place most people have never visited and barely understand. People are getting richer. People are losing fortunes. And it's all happening on something called the stock market. But here's what nobody tells you. It's not as complicated as they want you to think. By the end of this video, you'll understand exactly what the stock market is, how it actually works, and why it matters for your money. Even if you've never invested a single dollar in your life, let's break it all down from scratch. Before we talk about the market, we need to talk about the product being sold in it, and that's a stock. Imagine your friend starts a pizza business. It's doing great, but she wants to expand and open 10 more locations. She needs $1 million to do it. She has two choices: go to a bank and borrow the money, or split the company into thousands of small pieces and sell those pieces to regular people like you and me. Those small pieces, that's a stock. Also called a share. When you buy a share, you own a tiny slice of that company. If the business grows and becomes more valuable, your slice becomes more valuable too. If it struggles, your slice loses value. That's it. That's what a stock is, a piece of ownership in a real business. Now imagine thousands of companies all doing the same thing, selling pieces of themselves to the public, and millions of people wanting to buy, sell, or trade those pieces every single day. You need a place for all of that to happen safely, fairly, and instantly. That place is the stock market. Think of it like a giant organized marketplace, like Amazon, but instead of buying products, you're buying and selling ownership in companies. In the United States, the two biggest stock exchanges are the NYSE, the New York Stock Exchange, which has been around since 1792, and the NASDAQ, home to most of the world's biggest tech companies like Apple, Google, and Microsoft. These exchanges are the address where stocks live and get traded. And today, you can access them from your phone in under 5 minutes. Here's where it gets really interesting. When a company wants to go public, meaning it wants to start selling shares to regular people, it does something called an IPO, an initial public offering. That's the company's very first day on the stock market. After that, those shares are traded between regular investors, people like you, not the company itself. The company already got its money on IPO day. After that, it's just buyers and sellers trading with each other. So what makes a stock's price go up or down? One word: demand. Let's say Apple is about to release a revolutionary new product. Millions of investors think Apple is going to make enormous profits, so they all want to buy Apple stock. More buyers than sellers equals price goes up. Now flip it. Imagine Apple announces disappointing sales. Investors panic and want to sell. More sellers than buyers equals price goes down. At its core, the stock market is just a massive real-time auction, where the price of everything is determined by what people believe it's worth right now. And that belief is shaped by company earnings, economic news, world events, interest rates, and sometimes just pure human emotion. Let's quickly run through the terms you'll hear constantly, explained in plain English. Bull market. When the market is going up over time, investors are confident. The economy is growing. Everyone feels good. Bear market. When the market drops 20% or more, fear takes over. People sell. Prices fall. This is where most beginners panic and most experienced investors quietly go shopping. Index. Instead of tracking one stock, an index tracks a whole group. The S&P 500 tracks America's 500 biggest companies. When people say the market is up today, they usually mean an index like this moved up. Portfolio. Your personal collection of investments. Stocks, funds, whatever you own, that's your portfolio. Dividends. Some companies pay you just for owning their stock. It's like getting rent from a property you own. That cash payment is called a dividend. You don't need to memorize all of this today, but now when you hear these words, you'll know exactly what they mean. Here's the thing most people miss. The stock market isn't just for Wall Street guys in suits. It's one of the most powerful tools that regular people have ever been given to build long-term wealth. Historically, the U.S. stock market has returned an average of about 10% per year over the long run. That means if you invested $10,000 today and left it alone for 30 years, you'd have over $170,000 without touching it, without any fancy strategy, just patience. That's the power of compound growth. Your money making money on top of money. The stock market is essentially the economy growing over time, and buying stocks is your way of owning a piece of that growth. The biggest risk? Not participating at all. So let's recap what you just learned. A stock is ownership in a company. The stock market is where those ownership pieces are bought and sold. Prices move based on supply, demand, and human emotion. And over the long run, the market has been one of the greatest wealth-building tools in history. You now know more about the stock market than most adults. If you want to go deeper, next week we're covering how to buy your first stock in 2026, step by step. So hit subscribe so you don't miss it. And drop a comment below. Are you a complete beginner, or have you already started investing? I'd love to know where you're at. See you in the next one.